All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you. And the first thing that I want to talk about is that JPMorgan's been saying that gold will suffer for years because of Bitcoin, which is kind of interesting. I think right now that's not the case. Gold is something like $1,800+ an ounce, and it was, I think, up to $2,100, somewhere around there. So it's actually doing pretty good. However, its gains are nothing like Bitcoin, and as soon as that starts to change and people start putting money over, gold is probably going to stagnate quite a bit. Probably will still always go up in price. It is always a reasonable investment, but Bitcoin, I think, will beat out many, many investments. It already has, but in the future here, with more institutions, more people piling in that money, buying Bitcoin, as it gets rarer and rarer, as more happenings come along. The rise of cryptocurrencies and mainstream finance is coming at the expense of gold, says JPMorgan Chase and Company. Money has poured into Bitcoin funds and out of gold since October, a trend that's only going to continue in the long run as more institutional investors take a position in cryptocurrencies. And that's, again, I think a little bit subjective. Gold indeed was a few $200 or $300 more than it is now. Is that money actually coming out of gold and going into Bitcoin? Kind of uncertain. But I think in the long run, I think this is definitely true. JPMorgan is one of the few Wall Street banks that's predicted a major shift in gold and crypto markets. As digital currencies become increasingly popular as an asset class, the trend poses a problem from bulls and precious metals markets all over the coming years if investors move even a small slice of their allocations away from gold and into crypto, and the adoption of Bitcoin by institutional investors has only begun, while for gold, its adoption by institutional investors is very advanced, they write. So the Grayscale Bitcoin Trust, a listed security popular with institutions, has seen inflows of almost $2 billion since October, compared with outflows of $7 billion for exchange-traded funds backed by gold. So quite a bit of gold, quite a bit of money in gold coming on down. And as Grayscale comes along, PayPal, and all the such MicroStrategy and whatnot, even though they're just a company, they're just spending all their money on Bitcoin, Bitcoin has been rising pretty steadily. And I think in the end, yeah, gold will always go up in price. I don't think gold is ever going to go away in that sense. But once the gold collectors, if you will, the gold investors start to realize the gains are better on Bitcoin over time as it gets more and more media attention, a lot of outflow of gold money will continue. But moving on here to different news, BTCE Saga ends in prison time for the founder. So if you guys don't remember this, the BTCE was one of the exchanges that most of the Bitcoin from the major hack actually flowed into and was laundered by Alexander Vinnik. So founder of the now defunct BTCE exchange has received 5 years in prison on money laundering charges, according to reports from the Moscow Times. Vinnik co-founded BTCE in 2011, and the exchange grew quickly, eventually handling 3% of global Bitcoin trading volume by 2015 and entering the top 20 exchanges by 2017. However, the U.S. government indicted Vinnik in 2017 on charges of laundering $4 billion worth of Bitcoin. The indictment included accusations that Vinnik withdrew and laundered 530,000 Bitcoin from the breached Mt. Gox exchange from 2011 and 2014. U.S. authorities seized BTCE in 2017, along with 38% of users' funds. Vinnik fled to Greece. Meanwhile, Greece authorities received extradition requests from the USA, Russia, and New Zealand for various offenses Vinnik allegedly carried out. So the guy was wanted in, well, let's just say a lot of countries. So Vinnik also had ties to paramilitaries and suspected terrorist organizations. U.S. authorities allege that the Fancy Bear cybercriminal organization used BTCE to launder funds then used to hack the Democratic National Committee. Fancy Bear also reportedly used those funds to attack German parliament computer systems. The Russian government issued 2 separate extradition requests for fraud and money laundering. Vinnik went on a hunger strike for 3 months in protest of his living conditions in Greek custody, and Greece eventually extradited Vinnik to France, January 2020. In 2018, Greek authorities foiled an attempt assassination plot aimed at killing Vinnick with poison. I actually remember doing an article on that one as well. The WEX exchange was established as a successor to BTCE in 2017, though it promised to compensate BTC users for their lost funds. WEX carried out an apparent exit scam in July 2018. Users on the WEX subreddit cited examples of WEX banning their accounts and withholding funds in the weeks leading up to the closure of the exchange. Before the exchange went dark, nominal owner Dmitry Vasilev sold WEX to Ukrainian paramilitary fighter Dmitry Kovchenko, who fought in Crimea to support the Russian annexation. So a whole mess of a story with the BTCE saga, and it actually continues on. I think there will actually be a good documentary on this one day, or at least like a movie or something. Either way, because this guy actually had a lot of paramilitary organizations, was involved in hacking of various, allegedly the Democratic National Committee and German Parliament, and much more. And all of the funds, almost all of the funds from Mt. Gox actually went through BTCE, and nobody really knew it at the time. So moving on. Clients deposit over 100,000 Ethereum on Kraken's new Ethereum 2.0 staking service. So again, a lot of exchanges coming out with that 2.0 Ethereum staking service. Coinbase probably going to be the last one to do it because they're so incredibly slow. And it just boggles my mind. They're such a huge exchange, and they make like billions of dollars a year, and they're always way behind on services. I really don't get it. But either way, Kraken's pleased to announce its new Ethereum 2.0 staking service has passed a key milestone, while clients depositing well over 100,000 Ethereum, or $60 million worth, in just 4 days since the launch. And remember, this is a super good thing because 100,000 Ethereum now completely locked up for God knows how long. Supposedly about 18 months they project till the phase 1, because we're in phase 0 right now, and then phase 1. You should actually be able to remove your staked Ethereum and begin selling it, which is probably going to be a good trading time, to be totally honest. With that said, again, 100,000 Ethereum is just totally locked up. So an additional 100,000. I think the contract is well over 1 million now, 100,000 alone on Kraken. And there's going to be a lot of pools and things like that popping up where all of this Ethereum is just essentially gone for well over a year, for nearly 2 years. And with the pace that Ethereum 2.0 actually progresses, and how long we've actually waited for phase 0 of Ethereum 2.0. I remember them talking about it at least 2 years ago. So yeah, probably a good 2 years. The total amount staked on Kraken hit the 100K threshold Tuesday, meaning approximately 8% of the Ethereum currently staked for Ethereum 2.0 is now staked on Kraken. On-chain staking allows clients to help verify the network, yada yada. Kraken is a staunch supporter of innovation in the cryptocurrency space. Just last week, Kraken committed to matching up to 150,000 in funding for open source projects on Ethereum. Kraken has been a long supporter of Ethereum. In fact, we were one of the first exchanges to list Ether in August 2015. We have watched as Ethereum has continued to grow in significance. As of December 1st, Ethereum trading volumes typically make up about 15 to 40% of our Bitcoin daily volumes. Token holders had previously little choice other than to stake tokens themselves, something that requires a significant technical understanding, as, again, Ethereum 2.0 is a little bit harder to stake than just simply downloading a wallet, letting it sync, and then slapping some things on there and turning on that staking button. A little bit more difficult than that. On Kraken, however, clients can now choose to stake through our exchange platform, as staking via Kraken pools clients together, tokens together. It improves the chances that they're going to be selected to verify transactions, thereby increasing potential payouts. In addition to Ethereum staking, which came online on Friday, clients can also stake on Polkadot, Tezos, Kasuma, Cosmos, with support for Flow coming soon. Kraken is also unique in offering clients the opportunity to earn regular rewards on deposited US dollars and euros, much like earning interest from a savings account. So, again, this is just a super good thing. As more and more pools open up, as Coinbase opens up eventually, whenever they feel like they're getting around to it, it's going to be pretty huge. BitPay applies to become a national U.S. bank. So I'm not a big fan of BitPay. I think BitPay is just another third party in the way of Bitcoin, even though that ironically, they are using Bitcoin. Yet, ironically, they're just a third party. So basically, if you go on to like something like Newegg or something like that, and they accept Bitcoin, which they did, and then they didn't, and then I think they do again. I don't know. And then you pay them. You end up paying them. You end up paying BitPay fiat, or you end up paying BitPay Bitcoin, and then they cash it out and then give the fiat to the company. So again, just another thing in the way. And this is mostly because companies don't feel like holding Bitcoin. Maybe it's illegal for some to do it as they would become an investor in some way, shape, or form. They would have to hire different people. They'd have to cash it out on the spot, sort of thing. So I get their purpose, but still kind of a third party in the way. BitPay wants to become a regulated bank. The cryptocurrency service has applied to the Office of Comptroller of the Currency, the OCC. A legal notice outlining the request was published by Atlanta Journal-Constitution earlier today. If successful, the move would see BitPay become a national bank, not unlike Wells Fargo or Citigroup. The company would be labeled BitPay National Trust Bank. It's so cheesy. The notice mentions a capitalization of $11,998,000, equating to 12 million issued shares. The organizers behind the move include BitPay's co-founder, CEO Stephen Pear, Anthony Galippi, and a whole bunch of other people. The official location of the bank would be in Alpharetta, Georgia, at its current headquarters. BitPay isn't the only firm to make the move towards becoming a crypto bank, others include Kraken, which became the first crypto exchange to win a banking charter in September. And I believe they won that banking charter in Wyoming, I believe it was Wyoming. Similarly, leading companies like Coinbase and Binance now offer attractive interest rates and staking services for customers as an incentive to keep their funds on their exchanges. And these initiatives arguably put them in direct competition towards traditional banks. There's a 30-day comment period for anyone who wants to respond to the BitPay's application, which expires on January 7th, 2021. And this is sort of why banks are in a little bit of trouble. And if they don't move over to Bitcoin, or at least include Bitcoin, rather, they're going to go down sooner or later. It might not be next year. It might not be in 5 years. It might take 10 years. But we're going to see banks disappear pretty quickly. In terms of it, like in historical length of time, it's going to be very quick. Just because now these basic BitPay is trying to become a bank. Kraken literally is a bank. At least they got their banking charter. I'm not sure what the next step and what legality level that is, but they got it in Wyoming. So only in Wyoming, which is kind of weird because nobody lives in Wyoming. But fair enough. Probably why it was easier for them to do it there, I guess. But this is certainly going to happen. I mean, JPMorgan is trying to make a stable coin, or they made their stable coin. I think they used it for the first time a few weeks ago, et cetera, et cetera. So crypto, not dead by any means. It is just moving along slowly but surely. It seems slow just every day in our lives, but if we were just to jump in the future 10, 20 years, we would see a totally different price, totally different world. It is moving quick, and eventually I think many countries are going to have their own digital currencies. I think corporations are going to have all their own digital currencies, and I think in a way all of the corporations that are likely going to eventually lobby around the securities law and have their own digital tokens, Samsung coin, Nike coin, Kellogg's Cornflakes coin. It doesn't even matter. Corporation, you name it, they're going to have to do it in the same way that in the 90s or early 2000s, every corporation had to have their own website. Before that, corporations didn't have their own websites. They literally had to buy the domain names from people because people would would basically buy up domain names, and they would call it McDonald's.com or BurgerKing.com and this, that, and the other thing. And then the company would actually have to come along and buy it for ridiculous sums from them. And I remember like early websites of various foods and companies and things like that, and it would be like, visit us, like Kellogg's Cornflakes, they're great, and it'd like, visit us on kellogg'scornflakes.com, and it would be like 2001, and you just think to yourself, like, what is on kellogg's.com exactly? Like a picture of all the cereals that we already know? I don't get why you would ever go to that website. But now, I mean, today, now they have to have a website, a Twitter, everything, and they have to be responding. I mean, Wendy's has a Twitter where basically the person in charge of the Twitter like roasts people and jokes all the time, and that's kind of a cool thing. I don't know, you know what I mean? But And in the future, it's going to be like every corporation has to have their own coin. And at first, you're going to think to yourself, why would Nike need a coin? Why would Samsung need a coin? Why do these corporations need a coin? But then fast forward again 10, 20 years, and you're going to be like, oh, okay, if they didn't, they would have just went out of business, right? Nobody would have known they existed, basically. So, $18,400 Bitcoin. So we're up just a little bit from yesterday. I mean, we're at 567 Ethereum. I think we were at like 560 or 555 the other day. 56-cent XRP. I think we were at like 57 today. So pretty much the same place, but we're up just a tiny little bit. You can see here like 0.49%, up 2%. So things still holding on to that $18,000, $19,000 mark. It's a matter of when is it going to burst through? When are the sell walls going to come? When are the sell walls going to come down? When are people going to have enough confidence to begin buying again now, as people have buyer's anxiety at the top? And of course, you don't want to buy at 19,000. Now, I argue that 19,000 is still a low price compared to the outward future, but we had that crash in 2017 around this period, and there's a bit of buyer anxiety, and the people just don't want to buy in right now because they don't want to get left high and dry. But I think as time goes on, as we stay at 18 or 19,000 for a long time, people are going to realize, okay, we are not going down. I better start buying in. Grayscale's going to come along and buy a whole bunch more. I'm sure they're buying it off market, but that is still taking Bitcoin from the market eventually, and those markets still have to fill up that Bitcoin in order to mass sell it again. So that all has to come from somewhere eventually, mostly from fees and stuff like that on exchanges, but then it's just not going back into circulation. In a sense, it's still not going back into circulation. It's just going to be bought by Grayscale. It's just going to be sit, that sort of thing. But that's all I have for you guys. I just want to remind you that there are still some Coinbase Earn programs. I'm going to have them in the description. I'm going to have them in the comments, the pinned comments. I think there are 3 compound signups, and there are still 4 banned signups. So get yourself some free cryptocurrency. If you have a Coinbase account and you haven't done those yet, you just click on them. It's Coinbase Earn. It asks you 3 mind-bogglingly simple questions. I mean, you could be drooling out of the side of your mouth while you do the questions. I'm not even sure if you can actually physically get them wrong. And you just get free cryptocurrency, and then you can invite others and get more. But it's basically free stuff. There is no sign up, unless you already have a Coinbase account. But there is no sign up. There is no ifs, ands, or buts about it. There's no catch or anything like that. But make sure you subscribe to the channel, like, share the video. That helps me out a lot. It's the best way to help out a YouTuber. Share the videos, and my social media in the description below as well. But as usual, I will see you guys next time.